Welcome back to EDS, and in this video I'm going to share with you what makes a profitable trader, what strategies do they use, what are the techniques and how you can implement them, how you can make sure that you are a successful and profitable trader every week, month, year and so on. So there's 4 key things. You need a high win rate, a high return on capital, and for the strategy that we're going to be using, you want to be in a high implied volatility environment. And of course, as always, the final thing is you need to manage your position sizing. So we're going to be writing options contracts, and I'm going to show you how to do it and how to deploy the right strategies in the right way. So you want to open up a list of underlyings, specifically futures that have options available to trade on them. We're going to be writing contracts on futures, and the reason why is because futures uses span margin, and that's going to allow us to be capital efficient, and that's going to give us very high returns on capital, relatively speaking. So once you have your watch list open, you want to order everything from high to low IV rank, so make sure you have IV rank on your watch list as well. You only want to look at things to trade with an IV rank of over 30. Over 30 is high, over 50 is very high, and the reason why we do this is simply because volatility has an effect on option prices. When volatility is high, option prices are high, and because we're going to be selling or short, well, they're both the same thing. We're going to be selling or we're going to be short the contracts. So we want to sell high, buy low. So you want to sell when volatility is high and then buy when volatility is low. Volatility is mean reverting and it's contracting most of the time in the market. So this is all of these things are just adding up together to build our edge, basically. So we're going to get a high return on capital because we're using futures. We are making sure we're in a high IV environment. So there's 2 things left. We need a high win rate and we need to manage our position size. So you need to select an underlying to trade before we can tick off the next 2 things. If you have a smaller account, stick with something like bonds, currencies, soybeans. They don't use as much buying power as something as, say, for example, crude oil. If you have a larger account, trade whatever you like. Just make sure it has a nice and healthy IV rank. We're going to have a look at LE, which is live cattle. It's trading at just over 193. It has an IV rank of 40.6, which is decent, it's respectable, and it has an absolute IV level of 17.6%. So we want to open up the trade tab, and you want to pick an expiration date. The trade tab, is just specific for this broker, but for any broker, basically, you just want to see a list of option expiration dates for the underlying, and you want to pick an expiration date that's between 30 and 60 days out in time. There's only one here available that fits our criteria, 35 days out, April 4th, and you want to open that up, and it's going to show you this, which is called the options chain. So very quickly, we have calls on the left, puts on the right. This horizontal orange line shows us where the price of the underlying is with respect to the strikes. We have our dotted blue lines that show us our 1 and 2 standard deviation levels. In the top right, we have our IV for this specific expiration date with the expected move in parentheses, which is currently plus or minus 7.36, and that's also visually displayed with this vertical orange bar. And when we are writing contracts, when we're short a contract, we want price to stay away from those contracts. We want those contracts to stay out of the money. So if we know what the expected move is, in order to get a high win rate, we just need to sell outside of that expected move. The further out you go, the higher your probability of success. However, the lower your return on capital will be because you are taking less risk, you're collecting less premium. So as a good medium point, I like to be outside the expected move, around the 1 standard deviation level, and more specifically between 15 and 20 deltas. So if we start off on the call side, we look down on the delta column. Also make sure you have delta on your options chain as well. So we're going to have a look at the 18 delta here at the 201 strike, and then we can find the 18 delta on the put side at the 185 strike. And as you can see, both contracts are outside the expected move. They are close to the 1 standard deviation level and between 15 and 20 deltas. So if we look at our pop here, this is our probability of profit. This is our probability of making at least 1 penny on the trade. It's 65%, which is decent. Anything over 50% is a high probability trade. So we're getting a 65% chance here of making money, and that's if we hold till expiration. But we don't have to hold till expiration. We can get out at, say, 50% of max profit. And normally for equities, our P50, which is your probability of hitting 50%, your P50 would be displayed, but for futures it's not. But basically it's 10 to 15% higher than your pop. So about, between 75 and 80% is going to be our P50, and we would typically look to take our profit off the table at 50%. So we would we're looking at between 75 and 80% chance of success here on this trade. If we were to get filled at this mid price, we would collect $710 up front, and our buying power requirement is going to be just over 1.2k. So we're going to collect 700 and we're going to put up 1.2. So as you can see, well above a 50% return. We're getting a very high return on capital with a very high win rate of 75 to 80%. So high win rate, high return on capital, high implied volatility environment, and all that's left now is to manage your position size. So you need to be careful of how much buying power you are allocating to your positions. In order to know how much you should be allocating, we've come up with a position sizing template. The link for this is in the description and it's free. It will take you over to this spreadsheet, and the way it works is you enter in the size of your portfolio. Say if you have a $50,000 account, you enter that at the top, and then below you enter in whatever the current VIX level is. So say if it's 25.9, and then everything's going to be calculated for you. I'll just change the VIX number again so you can see that everything is recalculated dynamically in accordance with whatever your portfolio amount is and whatever the VIX level is. Because when volatility in the market is high, our edge is high. Also, the chance of a black swan event is lower when the VIX is high. So you can be more aggressive, basically. And it's calculating everything for you. You just need to use this, and you'll be absolutely fine over the long run. If you do want to learn in more detail about what we do and how we do it, click on EDS Premium. The link for that will be in the description as well. Get yourself signed up. Inside you will have access to our portfolio that will allow you to see all of the positions that we're placing, how we manage risk, how we make adjustments, etc., all in real time. We are going to be starting a $1,000 to $100,000 challenge soon. So if you do have a smaller account, then by all means get involved before we start that challenge, and you can follow along. There is a full course as well, so you don't need to have any prior knowledge. We're going to teach you everything you need to know. It's a private community, so if you do get stuck, you can just speak to myself directly or with other like-minded individuals. There's a 100% money back guarantee, so once you have been through the course, if after 6 months, once you've been through the course and followed some of our trades, if for whatever reason you're not profitable, then we'll just work with you for free until you are, or you can simply request a full refund. So there's no risk to you. It's $9.99 a month to join. The price will be increasing, but once you're in, the price is locked in for life. So you are rewarded for getting in early. And the aim of EDS Premium is to teach you the skill. Once you've learned it, no one can take it from you. And we aim to get you to where you are self-sufficient within 6 to 12 months. You're always welcome to stay and be a part of the community, but 6 to 12 months and you should be good to go. So with that being said, I will see you guys on the inside.